welcome. You're watching First Take here on News 9. I am Suyash Maheshwari and with me in the studio is Amit Ranjan. As always, we'll bring you the morning action on D Street. Also will be in focus the September quarter earnings of Divi Labs. We'll get you the street's pulse on that. But before we do that, let's take a look at how the equity markets around the world are doing. Amit, over to you.
Yes, so S&P gave its best weekly performance since November 2022. So almost in one whole year, it was the best week for S&P 500.
Wow.
It closed at 4,358.3, up 0.94% from the previous closing. Dow was also up 5% in the last week, and it closed at 34,061, up 0.66% from the previous closing. Nasdaq Composite ended also higher at 1.38% at 13,478.28 from the previous closing. Now Stock 600 ended 0.17% higher at 444.24.
All right.
Now we come to the Asian markets. Hang Seng is up 1.69%.
Oh.
At 17,962.64 as we speak. And
right.
Nikkei is up 2.47% at 32,739.6. So a very good opening this week, at least for the Asian markets, and good closing worldwide.
All right. I mean, I'm reading at the other cues. The overall setup, Amit, at least as of Monday morning in this brand new week, is looking very positive. I was also looking at some of the other key factors that we have been tracking, which are very crucial for the Indian markets as well as emerging markets. The US 10-year bond yields, now they have currently slipped to around 4.55%, which is almost 0.5% down from its peak of 5% or so sort of levels. Now, oil, Brent crude, is currently hovering at around $85 a barrel mark. Basically, it's at the level at which it was before the Israel-Hamas war. Dollar index has also slipped by a full 1 percentage point, and it's down at around 105 sort of levels. Now, on the back of a positive cue, Indian markets also saw a gap up opening. By the way, this was the third gap up opening for the Indian markets in a row, with the first tick for Nifty coming in above the 19,300 mark. As you can see on your screen, the market is holding on to those gains. Nifty 50 as of 9:30 a.m. this morning is up 0.6%, just below the 19,350 mark. Sensex on the other hand is up 0.55% at 64,715 mark. The mid cap and the small cap index, Amit, the broader markets in general are also doing pretty well. Nifty mid cap 100 is up around 0.55% below the 39,000, 40,000 sort of levels, about 200 points shy of that. Small cap index on the other hand is up almost 1%. Actually, it opened 1% higher, and it's just a touching distance away from its all-time high levels, which sits at around 13,148 sort of levels. Volatility has picked up, although it's up 3.4%, as of 9:30 a.m. this morning, and the India VIX index was sitting at around 11.25. But now with that, also let's welcome our very first guest. For the very first time, he's joining us on the show, Mr. Santosh Meena, who's the head of research at Swastika Investmart. Hi, Santosh. A very good morning. Appreciate you joining us here on First Take.
Hi, very good morning, everyone.
Yeah. So, Santosh, now Nifty is up around 450-500 points off its recent lows. The global cues, all in all, are looking positive. So, from a technical standpoint, are we out of the woods yet?
Yes, if we see the chart of the Nifty, then there was a smart pullback from 200 exponential moving average. But now we are in a congestion zone of 19,350, which is a 50% retracement of fall from 19,850 to 18,800. Then we have a important resistance at 20-day moving average around 19,440. So there are multiple hurdles around 19,330, 440, then 550. But yes, view is bullish. The conviction of bulls will come back above 19,550. So on the downside, 19,220 will be an immediate support. Till then, the view will remain bullish. But you can see market is giving a gap up opening for last 3 days. But after a gap up opening, market remains lackluster or sideways. So for bulls to come back aggressively, Nifty has to cross 19,550 level. So view is bullish, but market may remain sideways till Nifty crosses 19,550 level.
All right, Santosh. I want to touch on the banking index as well. The Nifty Bank pack has been the weakest of the, of the two indices. Actually, the weakest of all indices on, NSE. It's up, although about 1,400 points of its recent low. In fact, it opened at 43,600 levels, which I think is the 20-day moving average for the Nifty banking pack. What's driving it higher, and do you expect the Nifty Bank to take markets to perhaps another peak in the next couple of months?
Yes, completely agree. The level you have mentioned, the 43,600, which is a 20-day moving average, as well as previous support level. So now it is a critical. But I believe if Bank Nifty managed to cross this level decisively, then it may take leadership from here, because technically it is oversold and aggressive short positions are there by FIs. So if any short covering will come, Bank Nifty will lead, and fundamentally as well, that if we Bank Nifty is among the cheapest to pick in the Indian market and the banking index. And apart from that, if you look at the results, the earning is strong, and as holding in Indian market at multi-year low, and which is in financial stocks. So if they will come back in the market, FIs will come back, then Bank Nifty may lead from here. And I believe today we may see some buying figures from the FIs. Generally, we see the trend after any important event, they create some long position in F&O market. Then from the next day onwards, they start buying in cash market. So let's see, today's FIs data will be interesting.
All right, Santosh. Also want to get your view on the Nifty Small Cap 100 Index. It has been, we were talking just about the Bank Nifty being the weakest. Nifty Small Cap has been the strongest. I think it's, just a touching distance away from its all-time high levels, 50-60 points odd shy. And even in the recent, decline that we saw, it was quite resilient. Unlike, in the past where we see correction taking place in the broader markets first and then the large caps. What's your view there? Is there some more party for the bulls left here?
Yes, Nifty Small Cap Index is the strongest counter in the world. Like Indian cricket team it is at the top in the market, and there is no signs of weakness in the market. So I believe the next leg of bull run is again starting, because it is breaking out the important resistance level of 13,100. Previous peak was around 13,100 level. So if it manages to sustain about that level, then we can see further rally in small cap counters. Yes, we know that there are some growth in some counters, but yes, many companies are posting good earnings. So I think individual counters will outperform. You will get many good ideas from a small cap space.
Yeah. Also, we had a lot of earnings this week. What was bigger than SBI? I'll get to you on the stock, but Amit over here has the numbers ready for us. Amit.
Yes, Suyash. SBI posted their results over the weekend, and their net profits were up marginally 8%. They stood at 14,330 crores, up from 13,264.5 crores the same quarter last year. Net interest income rose 12.3%, quite a bit of rise, to 39,500 crores, up from 35,174 crores the same quarter last year. Net interest margins were down 12 basis points, and they stood at 3.43%. Gross non-performing assets, there was an improvement. They stood at 2.55%, an improvement of 97 basis points from 3.52% a year ago. There was a big change in their provisions for the Q2 FY24, which stood at 115.3 crores versus 3,039 crores the same quarter last year, and sequentially also the last quarter they stood at 2,501 crores. So a big reduction in provisions. Let's look at quickly. I'll just go through their balance sheet, what their balance sheet looks like. Credit growth stood at 12.39% year on year. Domestic advances growing 13.21% year on year. Foreign offices advances grew 8.11%. Domestic advances growth was driven basically by SME advances, which rose 22.75% year on year, followed by retail personal advances, which grew 15.68% year on year. Foreign offices advances crossed the 5 lakh crore mark.
Wow.
So pretty good. Lastly, the agri and corporate loans registered YOY growth 14.76% and 6.62%. So agri loans grew 14.76, corporate loans grew 6.62%. Current and saving accounts ratio, CASA, stood at 41.88% as of 30th September 2023. So pretty good results, but for a little reduction in NIMs. Pretty good results as far as SBI is concerned.
All right, Santosh, I mean, good set of numbers, healthy loan growth there, asset quality best in 8 years. I mean, has met the street expectations, if not ahead. But the stock this morning, it opened in the green, has slipped by about 0.5% or so. And it has been a clear underperformer in the PSU banking space. I think in the last 1 month, it's down about 3%. In the last, in 2023 full year, it's down about 6% or so, whereas we have seen, other smaller banks, especially in the PSU space, turn into multi-baggers in some cases. What's the story there? What's the overhang on SBI stock?
Yes, if you look at the chart of the SBI, then there was a breakdown on around 5th of October, kind of head and shoulder formation, but the pattern has been failed, and we saw a strong reversal from 540 level. But the problem is that 580, 570 is a critical resistance zone. If you look at the 580 and 585 zone, it is a cluster of 50-day and 100-day moving average. But I believe it will cross this level. Once it will cross this 583 resistance level, today's high, then we can expect a short covering rally towards 600 level. We are seeing just a kind of profit booking, but I believe in second half today or in coming days, it may catch up momentum from here.
All
on the
right,
downside,
yeah.
Yes, on the downside, 570 level will act as a strong support level. So traders who are holding long position in SBI should keep his stop loss of 570 and hold position. Once it will cross 585 level, we will see a level of 600, 620 in coming days.
All right.
Yeah. So good results. We may see an up on SBI later in the day. Could you give us the top 5 picks for the day today? Yours.
Yes, so not for the day. I would suggest hold for a few days, like 1 week. You will get a good return. First is Mankind Pharma. Today it is under pressure because lock-in period is coming to end. Anchor investors lock-in period. That's why today it is under pressure. But I believe it may outperform here. There's a physical pennant formation or symmetrical trigger formation breakout in this counter. So I'm expecting 1900 levels in coming days. So buy at current level, keep a stop loss of 1700. Second counter is NBCC. It is another strongest counter after breaking out of double bottom or double bottom formation. It shows a pullback that took a support at 20-day moving average. Now it is again showing strength. So I believe it may outperform from here. Keep a stop loss of 63 and the target is 77. Another one is AI Engineering, one of the strongest counter. It is an indirect play for cement space, and there is a classical breakout of bullish pennant formation, and so it may continue its upward movement. Today it has results also, so I'm expecting level of 4,000 coming days, and the stop loss is 3,600. My last pick is LNTFL. It is showing a strong momentum actually. You can see a classical cup and handle formation on the upside, which may continue, and it may continue its bullish momentum. And I believe we can see 550 level in near term in next 1 to 2 days, and where stop loss would be 136.
All right, Santosh. Thank you for joining us on First Take this morning. Hope to see you soon.
Yeah, thank you everyone.
Now, Amit, as we just mentioned, like earnings season is on. Actually, we are just about to close onto the September quarter result season. A Nifty 50 company that's due to come out today is Divi Labs. What are the expectations there?
Yeah, they something that is not sitting well with them because of their high contribution, stellar contribution during the COVID-19 period last year of their drug Molnupiravir. Now, because of that, the last fiscal, their results were very good. This fiscal, the drug maker is expected to post a net profit of 423 crores, down 14.3%. So that up has not happened because of COVID is over now. It is down from 493.6 crores clocked the same year last year. Revenue is seen rising marginally by 3% year on year to 1,913.2 crores compared to 1,854.54 crores the same quarter, the previous fiscal. On a sequential basis, however, the growth comes in at around 8% in the revenues. The expectations of moderate sequential growth are on account of lower export shipments that happened in August. Much of the sales in Q2 are likely driven by generics. So, and nutraceuticals. Nutraceuticals are basically nutritional drugs. And so it's basically a little bit of down in their profits. Revenues are marginally up, but sequentially they are going up steadily.
All right. I'm also looking at the stock this morning, Amit. Divi Slab is up about 0.5% ahead of the earnings, but it's been an underperformer at least so far this year. I mean, on every time chart that I can see, 1 month, 6 month, 1 year, it's been an underperformer. On a 1 month basis, it's down about 10%, whereas Nifty Pharma is down about 1% or so. In the last 6 months, it's down about 2%, whereas Nifty Pharma has given returns of about 22 to 23%. On a 1 year basis, it's down about 11%, whereas Nifty Pharma has given returns of about 15%. So a clear underperformer, but as you said, I think results are expected to be good. So perhaps there could be
sequentially good, and all these with the pharma sector, they posted stellar results during the COVID years.
Right.
And this company in particular too. So it's probably just a correction.
All right. But with that, let's also welcome our second guest on the show, who's Mr. Gaurang Shah, Senior Vice President at Geojit Financial Services. Good morning, sir. Great to see you as always.
Thank you very much, and morning to all of you all.
Yeah. So the Indian markets, I mean, in the last few weeks, as we have been talking about the markets with you and other guests as well, has been highly reactive to the global cues. You know, since the war broke out in the Middle East, and there was threat of Europe perhaps slipping into recession, the situation going on in the US, or can say US exceptionalism that is playing out, China not showing much demand, numbers not looking good there. What are the factors you will be tracking going ahead, especially since the in the last week or so, global cues have more or less turned around?
So, Suresh, I think we spoke about geopolitical situation about 2.5 years back when Russia-Ukraine happened. Now today everybody's forgotten about Russia-Ukraine and we are talking about Israel and Gaza and Hezbollah and Hamas and God knows what not. I guess, markets will possibly forget this and will start walking its stride as we go forward from here on. Reactions will depend upon the news flows that come out of the current geopolitical situation. Whether other neighboring countries actively wanted to jump into this particular fire, which they themselves have created. The reason why that would be because of the crude oil prices. Now, in case if the situation gets prolonged and no other country gets involved and crude oil prices start moving down south, then I think markets across the globe will possibly would breathe a sign of relief and get back to work as usual. Earnings is what we've been tracking. We are possibly at the last leg of the earnings for this financial year, second quarter. And whatever we've seen up till now, I think the good part is that there is no disappointment. Domestically, 5 state election and the outcome of those state election in first week of December, I guess markets would possibly treat that. Along with that, you have a big election next year. So you would be possibly, trading in a narrow range with a positive bias. And of course, other domestic triggers in form of positivities about GDP, about interest rates, about inflation is what we'll be tracking. This week, incidentally, is full of events globally. From Europe to US to China to Japan, you have a lot of data points coming out. Our own data points are also coming out. And you remember we spoke last time, sub 19,000 on the Nifty spot. We always felt that these are great opportunities to nibble into some stock specific ideas. And I guess that's what has translated. Not that you will see any great outperformance or underperformance, but a range bound trade is what we believe.
All right. Talking about, India being at least in terms of valuations looking attractive, FIIs, foreign institutional investors who, I mean, we have been talking about it, have been selling Indian equities incessantly in the past couple of months. And I know, sir, you have maintained that, here on the show, that they are the ones who are missing out. And to your point, you are right in saying, since we have seen a 500 odd point rebound since the recent lows. But now, since there is a global risk of sentiment, do you think that they'll finally return to the table?
Like I mentioned, Shuya, see, FIs will track larger domestic data points wherever and whichever country they want to go and invest. And unfortunately, the sad part of our great domestic dynamism is that we have elections all throughout the year. So they will possibly be looking at this 5-state elections. Next year you have a big election. They will come back. I'm not denying that. And I always believe that they will come back, because where else they have to go? If you can identify a single emerging market like India, which has got 6% plus GDP growth rate, interest rates have been stable for last 5 credit policies. And of course, inflation is within the comfort zone of the central bank, that is the Reserve Bank of India. And you have a huge population, great consumption theme, etc., etc., etc. Government is doing the right policies, etc. So they will come back. Now, whether they will come in a big bang way, I don't think so. Whether they will come in bits and pieces, parts, and in a slow manner, I think that's what exactly will happen. And, like I said, domestic guys have been selling, beg your pardon, FIs have been selling, but domestic guys have got the equal strength to absorb that selling pressure by way of buy-side figures. And like I mentioned last time to your colleague, had it not been for the domestic guys buying, we would have been down and out about 20-25% because of the selling pressure.
Sir, I mean, I think Nifty is currently around 900 point of its all-time high of 20,200 something levels. Can we expect an all-time high this year?
I hope so. But there are, global and local headwinds. Let's face it. I know everybody was speaking about Diwali. Again, market seeing a new high, but then unfortunate Middle East incident happened. FIs also sold, etc., etc. I think I would say that I will not be in a hurry, Suyash. I think we've seen a sharp correction from 20,200 to 18,850 or 18,860 or thereabout. I would rather see more stability in the markets and a slow and gradual upward move rather than seeing any runaway rally and seeing an all-time high. I know there are a lot of noise on the street that by Diwali is just round the corner, by the way. And recovering from current levels of 19,350 to 20,200 and beyond, I think that's a little bit too much to ask.
All right.
Good morning, Gaurang. You mentioned that the earnings season is coming to a close. Did any of the sectors surprise you positively or negatively with their results this quarter?
I'm sorry, I couldn't hear you properly because your audio was breaking up. Can you please repeat your question?
I'll repeat myself. Gaurang, you said that we know the earnings season is coming to a close. Were there any sectors that surprised you positively or negatively in this quarter gone by?
So none on the negative side hugely. I mean, metals is the only one that possibly reported numbers below the weather, or maybe not up to the mark. But again, metal is more of a global play because of the China news flows, because of the global, ferrous, non-ferrous prices, etc., etc. So metal was the only one which I would say not negative, but might have missed the mark. Other than that, I think IT, again, a decent set of numbers, no big negative. Banks, NBFCs have reported strong numbers, auto reported strong numbers, FMCG companies, whatever we've seen up till now, again, very strong set of numbers. Cement, I think, has done mixed, more on the good, very few on the, red mark or black spots. And my sense is that you would possibly see similar performance or maybe a little bit of more improvement as we go forward into the Q3 and Q4. So to sum it up, I would say I would give it a thumbs up to whatever we've seen in the second quarter earnings, with no large, black marks or black spots, if you will.
Gaurang, what do you think about the aviation sector? Indigo, which posted its results, were in the green now. They posted a profit of almost 189 crores as against a loss of more than 1500 crores the same quarter last year. Their stock is up about, even as we speak, about 2.44%. So what is your view on the aviation sector?
So this is the only name that we can sensibly speak about in terms of listed entities. Another disclosure, right from the time of the IPO and post-listing, we have maintained a buy call on Interglobe Aviation every 6 months, every yearly, depending upon how they have performed in terms of numbers. We have revised the target upwards. Currently, I think the target stands at about 3,000. My only worry is whether the issue which grounded the so-called airline Go First because of the Plath and Whitney engines, and similar is the case with Interglobe Aviation. A sizable number of aircrafts are Airbus A320neo, which are fitted with Plath and Whitney engines. Some of them already have an issue, some of them are grounded. Unfortunately, the company Plath and Whitney is not able to meet up to the expectation or the agreements that they had made in terms of post sales servicing of the engines, keeping it up to the mark. So that, and the big problem over here is that for an aviation company, it will cost less to keep the aircraft in the air, but it will cost them more to keep it grounded on the tarmac in a parking bay. That's the big problem, and that's what exactly I'm worried about. I hope that Interglobe Aviation doesn't have any serious issue with the Plath and Whitney engines.
Gaurang, another sector I wanted to pick your brains on was the banking sector. Now, State Bank of India reduced their provisioning for losses and bad debts to 115 crores, down from 3,039 crores. How do you look at this development? Is it good for the banking sector as a whole, or is just SBI?
I think overall, if you go to see, even if you go to see smaller or mid-size public sector banks, case in point, Canara Bank. I mean, the number that Canara Bank reported, I don't think anybody would have penciled down on the street. Similarly, with case of Bank of Baroda, PNB has the legacy issues, but they are improving. Smaller banks we don't cover, so I won't comment on smaller public sector banks, but these are the names that we are extremely positive on. And if you see the reflection on the private sector banks also, I don't think there has been any number which has disappointed the street. In fact, there's been tremendous amount of recovery. And the good part is that as the, as the situation comes back to, normal, what I have witnessed is, and what you must have also seen is that there is a lot of fundraising that banks and NBFCs have undertaken, possibly indicating that they expect a prolonged credit demand to come through. Run rate as far as the repayment of principal and interest is concerned is extremely strong. And by the virtue of that, you will have lower gross and net NPAs, lower provisioning, improved balance sheet in terms of net profitability. And I have always believed in one thing: if India has to become the next $1 trillion economy, then I think banking and finance will take the lead first, because that is going to be the backbone to reach towards that milestone of next $1 trillion economy.
All right, that's the view from Mr. Gaurang Shah. Sir, always a pleasure talking to you. Appreciate you joining us here on First Take.
Thank you so much. All the best.
Thank you, sir. But Amit, before we wrap things up, let's also look at how the market is doing. As of 10 a.m., as I'm made to believe, the market is still holding on to those gains. Although still, finding some bit of a pressure at 19,350 sort of levels. And that is for Nifty. As you can see on your screen, as of 10 a.m. this morning, Nifty 50 is currently sitting, up about 0.62% at 19,350 sort of levels. Sensex, on the other hand, is also holding on to those gains, but finding some bit of resistance at 64,800 sort of levels. The mid-cap index has, gained since morning up, about, I think, 20-30 odd points or so. The Nifty Mid-Cap 100 as of 10 a.m. was up 0.66% at 39,850 mark. Whereas the small cap index, Amit, is slowly and steadily inching towards that all-time high levels, just 30 points or so shy of that all-time high. But with that, we have completely run out of time on this edition of First Take. Keep watching News 9.
Delhi has the fastest growing metro network among G20 nations. From 6 stations in 2002,